Hey everybody, Ryan here. Sitting in my car, I've got an iPad here that I've been doing a lot of chartistry with, and so I wanted to jump in and share a couple thoughts on crypto. Why not? So the first thing that I wanted to talk about is, okay, there's a couple things. So this is what I was looking at earlier. And as you know, if you've checked out this channel before, the place that I come at crypto from is from the perspective of a recovering cryptoholic that is trying to get my bearings and figure out what about this space do I really believe in? Where do I actually want to invest my time and attention? And I found that despite my own best judgment, I have spent a lot of time lately just looking at charts. It's something that I still really enjoy. And most of what I look at is Bitcoin. But what I've been looking at today are a couple different projects, and I wanted to just share some thoughts. So with that long preamble, basically saying nothing in a lot of words, what I've been doing lately is pretty much since about April of last year. So April, we were up in the like 35, 36. I say April, but in reality, it's probably more like May. It was after kind of a big crash. Maybe I'm just exaggerating. It might be more like June. It was this time period. So we hit the bottom, and I said to myself, okay, if I'm going to play in crypto, I'm going to follow the best advice that I think I've given, that I've heard, and that is to DCA, and walk away. DCA is a dollar cost average, and essentially what that means is that even though crypto has gone up and down, I've just been buying $100 of Bitcoin a week. Let's go to the weekly for, how many weeks is this? Quite a few. So now in my Bitcoin wallet, where I just had all my Bitcoin kind of stacked, I've got a few $1,000 worth of Bitcoin. And what was cool is that when we hit this little run and we can measure it, getting used to this. Let's turn off the pencil. So we can measure this move. Up until its peak, it was about 50%, which is really cool. So all of that DCA money that I had put in was suddenly worth a lot more, 50% more. And when you can see here at the bottom, if I go to the weekly here, let's go to the daily. This is the fear and greed index down here. And you can see that's my stochastic RSI, but let's just look at the fear and greed index. Boop. When we had this little pump, we also moved up in the fear and greed index. And so one of the strategies that I had talked about was to be dollar cost averaging in at, this is not what I've done, but this is what I talked about, 2 units. So let's say a unit is $100. This would be 2 of those a week, so $200 a week. And then if you are in not extreme fear, but neutral fear, or just fear, that would be 1 unit. And then neutral is you do nothing. And then when you are in just normal greed, you would sell 1. And if you're in extreme greed, you sell 2 per week. So each one of these is per week. So I've just been doing a standard $100 a week buy, even when we were in the extreme fear. And then when we got back up into this neutral, I stopped my buy. And now that we're coming back down into fear, I am resuming my buy. So that is kind of my crypto strategy right now, and I'll tell you what it makes me think of. Let's see here. Thanks for bearing with me. I want to do more on-the-go kind of things, and so I'm hoping that I can just get used to this iPad. TradingView is such an awesome application on the desktop and on mobile. It's really pretty amazing. I feel like I'm in the future all the time. Let's see. I'm just going to clear off all the drawings here. We'll just remove them. Okay. So here's what my mind has been telling me lately. I want to go back to the weekly here. 1 week, so we can zoom out. I have this on the logarithmic scale. And actually, because of that, let's go to the BLX, the Bitcoin Liquid Index. One of my favorite charts to look at because it has the longest tail of data. We've looked at this quite a bit on this channel. We can see all of these previous market cycle peaks. You can see these green lines, and they weren't locked, so they might be not exact, but they're close enough to where the halvings are. And so let me show you what I have been thinking about. So we've talked a little bit on this channel about how there is a flattening that is happening with Bitcoin's exponential growth. Now, if you look at this off of the logarithmic curve, well, let me show you something real quick. So if I go to my indicators here and I turn on the logarithmic regression bands, boop. If I'm on the logarithmic scale, and this is where I look at it the most, because you really see the relief, you see the relative amplitude of these past market cycles. And when I say relative amplitude, it's the percentage move. So even though if I go off of log and I just go to the standard regular price chart, these past market cycles, they don't even show up. Even if I really stretch this out, we can see 2017, but we can barely see, we can't even really see at all the previous market cycles. And so this looks like a logarithmic, like hockey stick curve, like an exponential hockey stick growth when we look at the logarithmic bands on the normal scale. But the thing to keep in mind is that while this looks like exponential growth and is, when we look at the logarithmic scale, we see that the percentage gains are decreasing. So even though on that last view on the regular scale, we could barely see 2013's peak, the thing to keep in mind is that in 2013's peak, if we go from, let's see here, where's my measure tool? Measure. If we go from kind of the middle of, or actually let's just go from the halving. Let's just go right from that halving. From the halving to the market cycle peak was 10,900% growth. And in crypto, I think it makes a lot more sense to think in terms of percentages, because if you're putting in fiat currency, or even if you're swapping around your coins, you're trying to find where is the percentage growth that you can then cash out on. So even though in the past the fluctuations were only from $1,162 a coin to 11,620. I might not have those values. Oh, that's right. Yeah, I'm sorry. It's from $10 to 1,172. So that is a much bigger percentage increase than what happened in the last bull market cycle. So if I measure this most recent one, and let's just go from the halving just to keep things standard. If I go up to that second peak, 728% growth. So why is this important? Well, I think what this demonstrates is that as a crypto gets more mature, which Bitcoin certainly has, we see a lot more institutional players here. We see a lot more algorithm trading and market making and all of the stuff that happens in traditional markets is now happening here in Bitcoin. It has the positive effect that there's more interest, there's more players, there's more stability, even in the volatility. It's actually more stable, less volatile. But the downside is that those returns are diminishing. And that's why you see over here to the right, I just very crudely extended that rainbow band and was trying to predict where the next market cycle might go. Assuming, and it's a huge assumption, it's a possibility that we repeat this pattern that we've now seen 4 times again. And it might look totally different. There might be a different shape in here, but this is just hypothetical. If we continued this exponential growth, this logarithmic regression, could we see Bitcoin in the neighborhood of $150,000? And that's kind of what this would predict. Okay, so this is what I really wanted to show you, is that, okay, I'm DCAing into Bitcoin again, but Bitcoin, as we just saw, has these diminishing returns. So if I'm not just looking to, well, let me just draw this real fast. I'm not looking to just get modest gains. I want to get some bigger gains potentially from some of the projects that I plan to invest in. So these are Fibonacci retracements. Let me take off the, let me hide the regression bands here, just so that we can see this a little more clearly. Okay, so check this out. I think this is pretty cool. We're going to do fib retracements from the peak of 2017 down to the bear market floor, as it were. And this is just, close enough. I'm not getting exact, but swing high to swing low. And you can see in this Fibonacci extension, if I can zoom in here. Okay, so this red line, this is our 1 value, a value of 1. And then we swung down to 0. Here's the floor. And so now these gray lines are a little hard to see, but this is the 0.23, 0.38, 0.5, so exactly half of the value. And it looks a little truncated because this is the logarithmic chart, remember. But now here's this magic Fibonacci golden pocket where things find a lot of resistance. You can see in the last bull market, bear market, there was this big rally back, and it got right to the 0.618, and that's where the final rejection happened, taking it all the way back down to the COVID crash before exploding up. But what you can see here is that as far as these fib extensions go, Bitcoin got right up into this upper layer, almost to the red band. And when I actually do this a little bit more precisely and on some of the other charts, it is ridiculously close, how close that got to that 4.236 Fibonacci extension. So the thing that's interesting about that is that if I look at, let's go to Ethereum, and let's take a look. This is now Ethereum on the logarithmic scale. And if I do the same thing now, I'm going to grab my, I have it up here. I'm going to do a fib retracement from the peak in 2018 down to the bear market floor, right around there. And again, this is just getting close, but you can see that the extension got right to the 3.618, the 4.236. So we stayed within this Fibonacci extension, and we actually interacted with it as we would expect. So we see the, that golden pocket was resistance and then support, and then we came back and found support in the 2022 bottom, which might have very well been the low for Ethereum. Okay, so now here's where my mind is and why I'm making this video, is that, okay, dollar cost averaging into Bitcoin, I've been doing that now for months and months, and I've got a nice stack, and I feel pretty good about it. And if we see another big pump, another bull run in 2023, 2024, what could we expect to see based on this very simple logarithmic regression and these Fibonacci extensions. Well, let me take off this current one. We'll delete that. And let's do the same thing. Let's even just pretend that the bottom is already in. I've heard, some of my favorites in the space that I still listen to. Blockchain Backer, who I really enjoy his content. He was saying that based on all of his technicals, the bottom is in. So let's just run with that. So let's do another fib retracement now from our market cycle peak down to this bottom. Again, this is on the logarithmic regression. So here's what we could potentially see just based on the fibs. Nothing too fancy or there's not a lot of additional fundamentals here. We're just looking at the technicals. And that actually has the projection a little bit higher than my kind of crudely drawn rainbow chart. And maybe there's something in between. Maybe it's not just the logarithmic regression. Maybe it's not the full fib extension. Maybe it's something in between. So let's measure that move and see what could happen for Bitcoin. So if we go, let's measure it. Boop, boop. So from the bottom up to, and I'm not going to go all the way to the 4.2, and I'm not going to go all the way down to, what was basically the 2.6. I'll go right in between. I'll do the 3.61. So this could get us to a 1,280% increase for Bitcoin from the floor, from that bottom. So 1,280%. Now, will it get that high? I don't know. Will it be more like this rainbow band indicated, just under 1,000%? Somewhere in there. I'm not expecting to see $550,000 Bitcoin next time around. I just don't think the cycle is going to do that. It sure could, but I just want to point out this idea that, with Bitcoin, if everything goes exactly as it has in the past and everything goes great and it goes a full extension, 1,200% gains. Okay, what happens when we look at Ethereum with the same kind of idea? So if let's get rid of this jammer. And now let's again assume that the bottom is in for Ethereum. Let's do a fib retracement from swing high to swing low. And what do we see if we measure that move? From the bottom to the top. And we'll just keep it all fair. We'll just not go all the way to the 4.2. We'll keep it around the 3.6, 2.6 to 3.6. So that's looking like 1,700%, between 1,500% and 1,700%. And so it's more than Bitcoin, just a little bit, marginally more percentage growth. So Ethereum as a next place for me to be DCing into. Now, fortunately, I've actually stacked up a little bit of ETH because I have released a couple NFTs, and I had ETH in wallets, and so it's kind of appreciating in the same way. So I've already got a little stack of ETH, but my plan is now to DCA into ETH a little bit more because I think that will grab even more percentage growth in the next cycle, if that all indeed plays out. Okay, well, let's take a look at this watch list. What else could we look at here? The premise here is that as you go smaller market cap, you see bigger percentage increase possibilities with each cycle because it's more volatile. The market cap being lower means that any amount in is going to affect the price more because it's not padded, as it were, by such a large market cap. So just kind of arbitrarily here, looking at Cardano, for example. And I was looking at this earlier. So if we again looked kind of swing high to swing low for this last cycle, and we measure that move, Cardano, if we got up to that 3.6, that's looking like 4,392%. So substantially larger. But there's also more risk. And the farther you go down the list of the top cryptos, the higher the risk becomes, I believe. And I'll give you an example. If I go to my watch list here and open up kind of a cool project that I was following, let's look at Hedera, HBAR. So if I go to the chart here, and I was looking at this earlier. Oh, no, I didn't draw those. Okay, so let's just, again, do the same kind of thought exercise. And this is just super basic, but I just want to show that the percentage gains in the fibs gets larger and larger the smaller the cap of the coin is. So now if we measure this from bottom, oops, still getting used to this iPad, but the fact that I can just do this from my car is freaking dope. Okay, so, come on now. So if we got up into, the 3.6-ish area, 5,892% growth. So that's pretty cool. And I think you see this across the board. The smaller the capped coin, the more volatility, the more percentage gains, because it is, it's kind of, the smaller the cap, the more the caps on the waves. But, big caveat. I was actually at the Ethereum Denver conference over the weekend, and it was really cool. I was there with a buddy of mine that I grew up with. He's all into crypto. It was really fun just hanging out. Hedera had a whole big pavilion there in the convention center, and it was very well put together, and they were kind of like big boys in a little ETH conference. And I was talking about how I think Hedera is really cool. I know that it has really small energy usage, and it's just a really efficient chain for a lot of these projects. And there was someone in the Crypto Garden a couple years ago that was, really invested in this heavily and did a lot of research and was singing the praises of Hedera. And so even this morning when I was looking at these technicals and just thinking, okay, I'm already DCing into Bitcoin. That's great. That's like the foundation. I think I'm going to start DCAing into some of these altcoins, kind of going down that chain. So definitely into ETH, maybe back into ADA. And then, there's a lot of other ones. There's, Solana, there's XRP, all these things that I held in the past. And so this is just kind of looking at, okay, smaller percentages in. I don't think I'm going to go out and buy like 10 grand worth of Solana. It'd be nice if I could, or, ETH or whatever. But, what would I go into? And Hedera was in my head as sort of a possible kind of hedge bet. And you can see a lot of YouTubers talk about this idea of a portfolio and kind of managing a portfolio that's well-rounded. So you've got your blue chips, the Ethereums, the Bitcoins, and then you've got, a smaller percentage that's kind of placed like bets in case they pop off on these increasingly smaller projects. But the thing that I wanted to share also is if I go to my friend Lucas here, sent me a Reddit article. And I haven't looked into this extensively, so I don't want to spread FUD, but this is from 7 hours ago, and people are talking on Reddit about HBAR, the network, experiencing exploits, being down, and I'm not going to go into this. I don't know if this is fully happening, that Hashport bridge is down. It's the Luna lesson, right? It's that idea that the farther down you go, the more risk there is of just getting wiped out completely. And I don't think that's going to happen to Hedera, but, this morning I was thinking, I'm just going to kind of buy into Hedera, maybe do a weekly buy, set that up. And this just shows that technicals are one thing, fundamentals are another. And so just doing your research and making sure that the things that you're actually buying are the lower you go down, and even your Bitcoin holdings, everything, who knows, a alien spaceship could show up tomorrow. the sun solar flare could wipe it all out. There is nothing guaranteed in life. However, good fundamentals, good investigation is a lot better than just throwing your money at a 3-letter acronym and hoping for the best. So, I'm going to kind of leave it there, but I just wanted to share that because I think this is the time. This is the time to be thinking about crypto. If you were in the last market and you want to play again, the time to be buying is not when everyone is selling it to you and the news is selling it to you and the celebrities are selling it to you. And, when I think the joke was that when, your grandma calls you up and tells you need to buy crypto, like, holy crap, you better be selling because the grandmas are buying. So this is the time. This is not financial advice, but for me, this is where I am setting up these buys and I am separating my emotions from the market. I'm not looking to get into trading. I have been doing some paper trading in TradingView, which is kind of a cool way to just do some simulated trades. This is a hard market to trade right now. I think, at least for me, because I'm a novice trader in those kind of short-term day trade or swing trade time frames. But this, when I look at the history of Bitcoin to date and where we're likely to go and what we're likely to see next, these are the opportunities to kind of set up positions. And the way that I'm doing it is, most of it is in this foundational Bitcoin chunk. And then I'm going to be moving into ETH with some, DCA buys. And then I'm going to be moving into, some of these smaller and smaller projects, starting to kind of hedge my bets, knowing that I'm only going to put in what I'm willing to lose. So, getting a little hot in here. Maybe that's a downside of recording in a car. But just wanted to share that for what it's worth. I hope you're all well. And I'll catch you all next time. Stay tuned for more. Cheers.